What do you make of this?
Well, it's basically in our baseline, 200 billion, that's what we expected. We also calculate around 70 bips impact, but we do think countermeasures will basically bring GDP growth next year to 6.2, so we're slightly below consensus. Look, it was expected, it was in line. We have basically now a 10% tariff, and then the threat of basically starting on 1st of January that there's increasing to 25%. Which means the impact on inflation in the US should only be felt after the midterm election, but it also gives room for negotiation. And I think that's one of the base cases.
There is actually the appetite for negotiation on the part of both parties.
We still think there's an appetite for negotiations out of that. But we also have to see that if you look, for example, at the washing machine case, so the US consumer actually only felt a 20% increase on washing machines after 4 or 5 months. So the impact on inflation should be a bit more muted. But as a result, we also think the Fed will go on hold. So next week, definitely interest rate hike. That would be well announced already before. But afterwards, they will go on hold until the first quarter. That should limit the impact on the consumption side. And then we should not forget the equity market, particularly here in the region, already has priced in a lot out of that. And I think the relatively muted market reaction today also shows there's a lot in price already.
Yeah, exactly. You got used to it, haven't we, David?
Yeah, I mean, Adrian, this is one of your calls, right? Overweight yen against the Taiwan dollar. So two things. Why the Taiwan dollar? And second, does this equally mean you sort of go neutral on Japanese equities then?
Well, absolutely. So if you look at this trade, I think it's a very interesting trade to protect the portfolio in a downside scenario. So if this trade further escalate and 267 billion also come into the target because Japanese yen is a safe haven currency. They have $3 trillion of assets held outside from Japanese investors. So they basically repatriate some of these assets. The Japanese yen is an undervalued currency, and we do think inflation in Japan is actually moving up, and the central bank will start to move. We have the BOJ meeting tomorrow. And the Taiwanese dollar is very linked to the Chinese trade situation. And I think the first 50 billion, Taiwan was not really impacted, but now any additional tariffs will also impact Taiwanese goods, and in particular the value-added industry linked to the Chinese economy that will impact it. So we see some downside, and I think it's a really interesting trade in a downside scenario, but also in an upside scenario because Japanese yen is still undervalued.
Yeah, I'm wondering, when you mentioned this quote-unquote extreme scenario, can you help elaborate a little bit more about what you mean by an extreme scenario in trade? And at what point does Jay Powell say maybe 4 hikes this year and maybe even next year is a little bit too much now?
So we already think that Jay Powell will basically refrain from hiking in December out of this 200 billion.
Okay.
An extreme case would be basically the 260 billion will be added, will be taxed by 25%. Plus, we would see more tariffs coming also on cars for the European side, Japanese side, the Korean car manufacturer would be impacted. And that will really be a drag on global growth. There we would expect probably Chinese GDP be impacted by something like 2%. The US GDP will be impacted by something like 100 basis points. But I think that's not the strategy what the US administration tries to do. They try to be tough on China. There's probably also a bit of tailwind out of the midterm election that they try to achieve out of that. But if it's only related to China, and for us, it actually looks like the whole trade discussion is shifting from a global trade discussion to a Chinese trade discussion. There's a way around that. So we can see that in the case of the washing machines, that suddenly Vietnam had 0% shares of exporting washing machines to the US, and basically this moved up to 50%.